All right, what do you say? What do you know? What's going on, guys? A little bit of negativity out there, people feeling down, even though Bitcoin is just simply stuck in a range. Nothing has changed. Nothing has changed since yesterday, but the whining persists. As you can see, guys, if we don't go any lower, even on we could wick lower, but if we don't close a body candle lower, all we're doing here is putting in a higher low, which is bullish. So I don't know what people are complaining about, to be honest with you, but to each their own, I suppose. To each their own. We've rejected off the 30-day moving average 2 days in a row, almost 3 days in a row. We closed right on support at 92K, and we didn't hold it. So, but as long as we continue to close daily candles above 90K, fine, guys, we're fine. Really, as long as we don't put in a lower low than 86.2. Again, I don't know what people are complaining about, right? Nothing has changed. We're just ranging. So anyway, let's get into the chat just a wee bit. Wow, 0 super chats to start the stream. Let's see what's going on out there in the chat. Exit Flip says, hit the like button on your way in. Absolutely. My guy Otaku in the house. Happy Friday, Rob and friends. It's certainly Feed the Fire Friday. Let's go. Open mic Friday as well. Kizza, my dude. Hey, Rob, what's good? We know everything is being manipulated at this point. Are they not just manipulating the current price, but the chart as well? In which case, TA at this point is pointless. I mean, I wouldn't say the chart just kind of goes hand in hand with the price being manipulated, I suppose. So, yeah, I mean, but manipulation, but I mean, chart action still tells you, the general direction we should be going in. And I've been telling everybody for 2 days now that we're rejecting off the 30-day and that we need to get above it. And we haven't gotten above it, as you can see. So I don't know why anybody's surprised. I really don't, right? They'll just change the chart action and make you think what is probable is not. Yeah, you're absolutely right. You're absolutely right. Guys, make sure you hit the like and subscribe on the way in. What do we have? We have 86 people watching. It's a slow day today. Wow. 24 likes, guys. Let's get the likes up to 100. We can do that. We can do that. Gary, Rema's coming off the top rope with a good news today. I hope it's always good news, baby. It's a good day to have a good day, guys. Remember that. At this point, it is whatever will be. Exactly. Ty, good to see you, buddy. Overcomes in the house. Kizzy says, why don't you put some Pico and Gary on whilst the timer is coming? You know what? That's a pretty damn good idea. Let me talk to the team and see if someone can put together a 15-minute clip with a counter on it, and I'll be more than happy to do that. Absolutely. Great idea, Kizza. Great idea, brother. Chris, Rob, you called it. It kept getting rejected off the 30-day. So it was bound to retest the trend line. Great call, brother. What's next, you think? Yeah, I wouldn't be shocked to retest support down here, like I said, at 87,257. That wouldn't surprise me to kind of bounce off there, though we did come fairly close. So that may be enough. But as long as we keep putting in higher lows, that's fine. I wouldn't be shocked at all to see us gather some strength, maybe ping pong here for maybe the weekend, and then next week, maybe what we do, maybe we chop here, and then we build strength, and then we finally break above the 30-day, and we head up to the CME gap at 96K next week. That wouldn't surprise me. That would not surprise me. Or we dump below, put in a lower low, and maybe test 84,675 as support, right? Those are your two options, really. Yo, Mars, what's happening, man? Otaku says, don't let the bastards grind, yo. Never. Can't be shook. Can be rocked. They can't get us, brother. Chris says there's a song that gets stuck in my head in the mornings. It goes, clowns to the left of me, jokers to the right. Here I am, stuck in the middle with you. Sean says, looking forward to the Jasmine docs. Yes, good news on that front, guys. Actually, Zebek actually got back to me last night as well. And we are officially starting plans to make a Zebek documentary. So, yes, the Jasmine documentary is coming out. We're still getting footage sent over to the editors and stuff like that. So it's getting put together, guys. It's going to be a 3 or 4 part documentary series. And we are also in the works right now of planning out a Zebek documentary. So it is now officially in the works. So yeah, they gave me the blessing last night to make a documentary. So looking forward to the Jasmine documentary. Could use some positive news on the project. Absolutely. And there's a lot of positive news in there. Jay Doran supporting over on Rumble. Thank you so much. Make sure you're following us on Rumble and on Facebook, guys. If you prefer Facebook, make sure you're following us over there. We will be starting to live stream over there as well, dual live streaming, so make sure you're following us. Live long and prosper, the spot call. Make money on the way up and the way down. There you go. You know it's getting bad when William isn't here. Yes, where's William? What the hell? This Max Payne has everyone spooked. Not me. Not me, brother. I am nothing but bullish. Nothing but bullish. I could see institutions manipulating price until crypto bill passes in Q1 of 2026. By then, they will have substantial control of the rails. I agree with you on that, Aaron. And they will also hold a very, very big supply as well. And that's when though. But here's the thing. I was thinking today, guys. I was doing some driving around this morning, and I was thinking about how for me, a bearish signal is all of this good news that's coming out, right? All this good news that's coming out, and now we're starting to see, like we said, what was it? Was it Bank of America and all that telling their customers to now start buying crypto? That's bearish to me, guys. When we see the big institutions telling the general retail to start buying crypto, that's bearish to me, right? That means that they want to dump on retail. That's what that means, right? Crypto J505 in the house. We got Gengar chilling and killing like a villain. Jake the Snake says 74K is the target. Stay on target. Rip pilot. Hola, Mark. What's going on, brother? Good to see you, man. Quentin, my guy. What's happening? Otaku says Zebek. Hell yeah. We got our first super chat. Jake the Snake. I'm not late. I'm just chronologically challenged. There you go. Otaku says Max Payne is where I feel alive. Exactly. That's the thrill of the kill. Let's go, baby. What's up with your evening lives? Well, I mean, here's the thing. On Monday, Tuesday, Wednesday, we have Patreon lives. Thursday, we have the Patreon live with special guests Max and Rue. And then Friday, Saturday, Sunday, we do the evening live streams on YouTube, right? So there is evening live streams Monday through Thursday, but they're only on the Patreon, right? So if you want to be, and I know you're over on the Patreon, but to everybody else, if you want to be involved in those live streams, you got to be over on the Patreon, my guys. Bruno says, good afternoon, Rob. Hopefully the World Cup in 2026 has crypto advertisements. I wouldn't be shocked. I would not be shocked at all, my friend. So yeah, absolutely. Okay, where are we here? Got another one from Kiza. Is Satoshi your special guest tomorrow, Rob? That's right. Don't miss Blockchain Buzz tomorrow, guys. It's going to be a good one. It's going to be a gooder. Let's get it. It will be at 1 p.m. Central, by the way, guys. 1 p.m. Central, not 6 p.m. Central. We have to switch it some Saturdays just because some of our guests live on the other side of the planet. And, asking them to do a 6 p.m. live stream is like asking them to do it at like 4 o'clock in the morning their time, which is not cool, right? So, Sensei Otaku brings the chaos. Yes, he does. That's my dude, man. All right. Ooh, Candyman dropping some cheddar. He says, at 65, my grandmother started walking 5 miles every day. She's 92 now, and we have no idea where she is. Nice. She's still walking. She's pulling a Forrest Gump. That's what's going on there. All right, we're caught up in the chat. Very, very skimpy on the super chats today. Passenger says, Rob, when are we going to see the Jasmine documentary? Footage is still being sent to the editors, so these things take time. We got to get it put together properly. It is. Keep in mind, guys, it's a 3 to 4 part documentary series, right? So it's not just, you don't just slap everything together, gift wrap it, like Max says, mash it, smash it, whatever, throw it in a stew, right? Give it an elbow drop. He says something like that, right? So yeah. All right, let's get into the news a little bit here, guys. Fidelity CEO, I own Bitcoin, predicts BTC will remain in people's savings. Fidelity CEO Abigail Johnson has reiterated her long-term confidence in Bitcoin. She recently told attendees at the Founders Summit in 2025 that she personally owns Bitcoin and sees it as a permanent asset in global savings strategies. Johnson described Bitcoin as a gold standard of the crypto world, noting that its durability, network strength, and longevity continue to strengthen its role as a foundational digital asset. Notably, Johnson explained that her conviction comes from both early exposure and Bitcoin proven resilience over time. She noted that while she doesn't hold a ton of Bitcoin, Bitcoin remains the asset she is most comfortable holding long term. According to her, Bitcoin persistence and system design make it a core savings instrument for many people. Moreover, she noted it will remain integral, to Fidelity's future plans. Johnson also highlighted Bitcoin's early user experience challenge. She suggests that despite its brilliance, Bitcoin could have used some IDEO resources to help the general public engage with it more easily in its formative years. It was very, very hard to buy Bitcoin in the early years, that's for sure. During the session, Johnson also reflected on the firm's journey into crypto. Notably, the discussion began not with hype, but with internal curiosity. Around 2013, she and several senior leaders met regularly to understand Bitcoin's mechanics. After months of study, the team concluded that Bitcoin was not only real, but capable of driving radical changes in Fidelity's business. That realization launched a series of internal brainstorming sessions that produced 52 potential crypto use cases. One of these ideas, accepting Bitcoin donations into Fidelity's charitable gift fund, became a breakthrough moment. According to Johnson, enabling Bitcoin donations was a simple concept, but transformative for the company. At the time, virtually no major financial institutions was willing to accept Bitcoin. Fidelity's move earned early credibility within the crypto ecosystem and became a bridge to more serious involvement. This initiative led Fidelity to launch its own mining operations. Johnson insisted that if Fidelity was going to participate in Bitcoin, it had to do it from the ground up, which meant mining directly. The mining experiment became the single highest returning business line in Fidelity's portfolio during that era. Their early purchases of Ant miners in 2013 eventually paid off in a way few had expected. Bitcoin remains central to Fidelity's mission of offering customers meaningful options in the evolving landscape. The firm launched a Bitcoin ETF in January of 2024 and has attracted $12.07 billion in investments, making it the second best performing Bitcoin ETF after BlackRock's. Ultimately, Fidelity is not stepping back from Bitcoin. Instead, it sees a future in which Bitcoin plays an even bigger role in long-term savings. And institutions like Fidelity are helping to make it more accessible to the next wave of users. Absolutely super fantastic. Where are we here? Kizza says, what's up with the Cloudflare dropping out all the time? What's the world come to not having internet? Yeah. Ditto. What's up, man? Hello, Rob. Do you think there will be a time where the market stops being coupled to Bitcoin? Yes, I do think at some point, listen, Bitcoin's volatility inevitably and eventually will die down, probably a cycle or two from now, once we know that all of these institutions and so many like retirement funds, you have to understand, we're just in the beginning phases of like pension funds and stuff like that, scooping up Bitcoin as well. Once pension funds really start to gain a larger percentage of the available Bitcoin, well, that's locked up long term because that's the point of pension funds, right? So you will start to see Bitcoin's volatility and eventually start to die down, probably somewhere around $1 million. And then, but you'll see it kind of decouple from newer altcoins at that point, right? Because there will always be companies launching new altcoins, new companies, new technologies coming around. So you'll always see new cryptocurrencies coming. They will be new and their volatility will be high, which means they will be decoupled from Bitcoin in the future, right? Ghost video. Yes, I will make a ghost video. Absolutely. Happy Friday, fam, from Braveheart. Stay positive, long-term mindset. There you go. Jake the Snake dropping cheddar. He says that Maximus crypto quote from Lord of the Rings, real nerd stuff. I love it. It goes, potatoes, boil them, mash them, stick them in a stew. You keep precious chips. Rob, do you think the 4-year cycle is dead? Well, it seems like it's expanded anyways, right? I staked my well for 11.7% APR yesterday. Passive income. Nice. There you go. I see that as a win right there, brother. I see that as a win. Absolutely. Can I get an amen to that? What's happening? What's happening over on Facebook? Over on X. Follow us on Facebook, by the way, guys, if you're not already. Pompliano says BlackRock CEO Larry Fink just admitted he was wrong about crypto.
Now, it's no secret to everybody. Wall Street, they haven't been the biggest fan of Bitcoin and cryptocurrencies. At first, they ignored it. They were just like, let these kids play on the internet. Let them go and lose all their money. Then all of a sudden, they got a little nervous. It looked like Bitcoin and cryptocurrencies were going to become a thing. And so they started to fight it really hard. They went and they tried to use regulatory capture. They tried to weaponize the justice system. And they simply did everything that they could to mitigate the threat that cryptocurrency provided. But here's the thing. These people are smart. It's easy to yell and scream and say, oh, they're so stupid. Trust me, anyone who's rolling a multi-billion-dollar company, they're not dumb. And Larry Fink, he has completely changed his mind. He now believes in Bitcoin. They've launched the Bitcoin ETF, which is the most successful product launch in the history of Wall Street. The Bitcoin ETF is now the most profitable product at BlackRock. And on top of that, Larry Fink's not above admitting that he got something wrong. Take a listen to what he had to say yesterday at the Deal Book Summit with Andrew Ross Sorkin.
Called crypto an index for money laundering. BlackRock
and thieves.
And thieves.
Yes.
Money laundering and thieves.
Right.
You now have the biggest Bitcoin ETF. So what happened here?
I have very strong views, but that doesn't mean I'm not wrong. By having strong views, you have to test yourself and ask yourself. And, in my role, I see, thousands of clients a year. I have, governmental leaders, and we have these conversations, and my thought process always evolves. And this is a very glaring public example of a big shift, in my opinion.
Now, here's my big takeaway from this, is that it's a sign of intelligence when somebody gets new information and changes their mind. That's what Larry's doing here. But this is the thing that I think people should be paying attention to. Cryptocurrency and Wall Street, they aren't going to be two different things in the future. Crypto will be dead within a decade. You're going to see finance become the term that everyone talks about because these big firms, they're starting to adopt stablecoins and Bitcoin and all of the crypto plumbing. And it's simply going to replace the old antiquated technology. But you as a user, you're going to use dollars, you're going to use store value assets, you're going to trade public equities, and you're simply going to move economic value all around the world. You don't care whether it's the antiquated technology or it's the crypto rails. All you know is things got faster and cheaper. And now Wall Street, they're on to the game, and they're not going to let this pass them by. Business is a game of be disrupted or evolve. And these guys, they're going to evolve, they're going to adopt this technology, and they're going to create massive amounts of profits for themselves and for their shareholders.
A lot of speculation right now, guys, that I tend to agree with is that, like Pomp just said, right, these institutions, these smart money, they're starting to realize, like, you guys know, first they fight you, right, and all that jazz, right? First they laugh at you, then they fight you, then you win, right? Well, what's happening right now is that we're starting to see acceptance, adoption, and promotion of crypto by smart money, which means that, of course, markets are being manipulated heavily. They want prices as low as possible, one, so that they can buy it, they can hold the monopoly on it so that they can make the money, right? Like he just said, people who own multi-billion-dollar companies are not stupid, right? They're manipulating this market because it's easy to. They're driving prices down so that they can buy and so that you will sell. They think you're stupid enough to sell it, and then 10, 15 years from now, you're going to look back and say, why the hell did I sell my Bitcoin? Why did I sell my crypto, right? So really, 10, 15 years from now, who do you want to be? Do you want to be the person who became, who became wealthy and made life-changing wealth in crypto because you were intelligent enough to hold on, you were not stupid enough to be manipulated? Or are you going to pull a temper tantrum? Are you going to stomp your feet, make stupid comments on the internet, sell your crypto, and then 15 years from now, 10 years from now, look back and go, what the hell was I thinking? now I'm still living paycheck to paycheck, while everyone who I was making fun of and making toxic comments about 10 years ago, they're all rich, right? Which one are you going to be? That's the question you got to answer for yourself, right? We also have Tom Lee. He's still making his calls, baby. He's still making his calls. Check it out. Tom Lee calls for $62,000 Ethereum.
Okay, so let me explain to you why Ethereum, now that we've talked about crypto, Ethereum is the future of finance. And what I mean by that is Ethereum in this year, it's having its 1971 moment. But what I'm saying is that in 1971, the dollar went off the gold standard. And in 1971, it galvanized Wall Street to create financial products to make sure the dollar would be the reserve currency. Well, in 2025, we're tokenizing everything. So it's not just the dollar that's getting tokenized, but it's stocks, bonds, real estate. And Wall Street is again going to take advantage of that and create products onto a smart contract platform. And where they're building this is on Ethereum. And today, if you look at the share of real world assets, and the prior panel talked about that, the majority of this, the vast majority, is being built on Ethereum. Even he has said Ethereum has won the smart contract war. As you know, Ethereum has been range bound for 5 years, as I've shaded here, but it's begun to break out. And that's one of the reasons why myself and Mosaics, Shen from Mosaics is here, we got very involved with Ethereum by turning Bitmine into an Ethereum treasury company because we saw this breakout coming. Now, this might actually be more important because Bitcoin and Ethereum are really the two most important crypto L1s or blockchains out there. But if 2025 is about tokenization, that means Ethereum's utility value should be rising. Therefore, you should watch this ratio. Well, I think Bitcoin's going to get to 250,000 within a few months. And if Ethereum price ratio to Bitcoin gets back to its 8-year average, that's $12,000 for Ethereum. But I think Ethereum is going to become the future of finance, the payment rails of the future. And if it gets to 0.25 relative to Bitcoin, that's 62,000. So I think Ethereum at 3,000, of course, is grossly undervalued.
Crazy targets, man. I dig it, though. I'm here for every little bit of it, man. Give me every little bit of it. What else is going on over on X? Oh, yes, we got this here from Powell. Okay. Got this little two-piece set here. Powell said that we'll be adding reserves at a certain point. Now, this was last month, he said, to their balance sheets. QE is coming. Now, listen to what he says here.
So you're right. The place we'll be on December 1 is that the size of the balance sheet is frozen. And as mortgage-backed securities mature, we'll reinvest those in treasury bills, which will foster both a more treasury balance sheet and also a shorter duration. So that's what, in the meantime, if you freeze the size of the balance sheet, the non-reserve liabilities, currency, for example, they're going to continue to grow organically. And because the size of the balance sheet is frozen, you have further shrinkage in reserves. And reserves is the thing that we're managing that has to be ample. So that'll happen for a time, but not a tremendously long time. We don't know exactly how long, but at a certain point, you'll want to start reserves to start gradually growing to keep up with, the size of the banking system and the size of the economy. So we'll be adding reserves at a certain point, and that's the last point. Even then.
So he said we will be adding reserves at a certain point, right? Okay. So now a lot of people that would be quantitative easing, right? Now a lot of people are excited because we saw the end of quantitative tightening the beginning of this month. That doesn't equal immediate quantitative easing, right? So as we segue over to this from Nick on X, part of Coin Bureau's team, he says QE isn't the next stop. Historically, the sequence is end of quantitative tightening, which we just started two or 3 days ago. Then we'll see bigger rate cuts, rules tweaked, crisis, quantitative easing, right? We are only in the first steps right now. Real quantitative easing doesn't arrive during routine pullbacks. It arrives when something breaks. History makes it very clear. In 2008, Q1, Lehman Brothers collapse, credit markets froze. November 2010, QE in Q2, deflation risks 9% unemployment. September 2012, quantitative easing 3, recovery too weak to stand alone, right? March of 2020, quantitative easing 4, COVID shutdown and global economy. You see, so we need something to break, right? So if you're positioning for quantitative easing, you're also positioning for a drawdown that forces it, right? So it doesn't just happen. There needs to be a cause for the effect. Does that make sense? Cause and effect. There needs to be a reason to start quantitative easing. So something has to break in order for them to fix, right? So we're not in quantitative easing quite yet. Could get a little bit worse before it gets better. You have to be ready for that, right? Survive that, and you could be survive that, and you could be rewarded, right? So patience, guys. Patience is everything. Cannot stress that enough, right? And people who don't have them, you can sit there and say, I'm just calling it like I see it, and you can say all that garbage that you want to say. If you don't have the patience, you're not going to make it. It's that simple, right? You can blame whoever you want. You can stomp your feet and pull temper tantrums. It's up to you to have the patience and the consistency to make it in this space, not anybody else. Ripple's latest signals suggest the U.S. may be moving towards crypto clarity faster than expected. Brad Garlinghouse, check him out.
Something just happened in the US that could change XRP's future faster than anyone expected. And almost nobody realizes the shift has already started. For months, crypto analysts wondered when the United States would finally make a decisive move. But this week, Brad Garlinghouse delivered a signal no one saw coming. He says the US is flipping pro-crypto faster than anyone realizes, and the Clarity Act could pass as early as 2026. That timeline is years ahead of what most predicted, and Crypto Chrome has been tracking this shift long before it hit the mainstream. Here's where it gets even more interesting. Ripple's Treasury partnership has already drawn interest from corporate clients representing nearly $10 trillion in assets. 10 trillion. Money at this scale doesn't move based on speculation or hype. It moves when major institutions see the next phase forming before the public does. For years, crypto innovation raced ahead while US policy lagged behind. But now, the law is shifting toward the very technology built to modernize the system. And XRP, engineered for institutional settlement, speed, and clarity, is suddenly right back in the center of the conversation. This is why the moment feels different. Institutions aren't waiting for final votes. They're positioning early, because the biggest moves in finance always happen before the public understands what's actually unfolding. So the real question isn't whether XRP is ready for the next phase, it's whether everyone else is paying attention. Because once the narrative shifts, the laws follow. And once the laws shift, the money moves. And as this transition accelerates, one thing becomes undeniable. The story unfolding right now traces back to the moment Brad Garlinghouse said the United States is flipping pro-crypto faster than anyone realizes.
Absolutely, guys, and not just XRP. The likes of Zbeck follows that as well. Don't get caught sleeping. Guys, we have 141 people watching. We have 63 likes. Smash the like button. Let's get it up there, guys. Let me get back into the chat a little bit here. What do we got? Top of the morning, Braveheart. Absolutely, absolutely. Hey Rob, thanks for everything you do. What's your opinion on Bitcoin Cash? I'm neutral on it. I don't hold any. I have no interest in holding any, but I do know a couple of people that are very, very bullish on it, and I think it will do well. But I'm not interested in it personally. Ray, what's happening, buddy? Hey, no problem, man. Candyman says, what does he know that everyone else doesn't for 250K Bitcoin? Exactly. That's the thing, guys. People don't realize is that when we see someone like Tom Lee or Michael Saylor or whomever, Larry Fink, speaking about crypto and Bitcoin, you have to understand something. This is not just an individual sitting up on a stage or on your TV talking his own opinions or her own opinions. Kathy Wood, for example. They have an entire team that's paid to analyze every possible outcome and statistic for these type of investments, right? So when you see these people giving these opinions, it's not just them talking. There's a whole team of people behind them that have done probably hours and hours and hours of research based on what's being said. Keep that in mind, right? Right, this from Jasmy Global today. We are pleased to announce that Jasmy is now supported on InterPortFi, enabling users to transfer Jasmy assets across multiple chains in a secure and seamless manner. Another partnership for Jasmy, and they utilize Chainlink CCIP to allow it reliable cross-chain operations. So there you go, guys. Zero slippage. Hey Rob, what do you think about Bob build on Bitcoin? I don't know anything about it, to be honest with you. Not enough to really give an opinion on it. Rob, can you call him and find out? Yeah, I'll just pick up the old phone and give him a shoutski. Give him a shoutski. All right, and back to what I was saying about market manipulation, guys. We just had $3 trillion institutions opening up to crypto in a single week. $11 trillion Vanguard is opening access to crypto ETFs to its 50 million clients. $1.8 trillion Bank of America is recommending 4% portfolio allocation to crypto. $12 trillion Charles Schwab is now allowing its clients to buy spot Bitcoin, spot crypto directly. Wall Street is opening the floodgates for Bitcoin and crypto, and you're still bearish on the future of the industry. Think about that for a second and wonder if maybe you're being a tad bit emotional and short term, right? All right, let's go over to Squawk Box. It's a good time to think about rebalancing, says Edward Jones's Mona. Check it out.
Joining us now, Mona Mahajan, head of investment strategy at Edward Jones. There's this guy who looks like Jesus, who is always asking you to pray with him. I don't know if you've seen those ads. I love this guy, but he talks about being able to reach a point of stillness where you feel still. I read your notes. Here it is. Listen to this, Becky Ann. Here's what Mona says. In our view, elevated valuations will require vigilance. However, lower rates, rising profits, and steady growth portend optimism for 2026. And you, not only that, you have 6 reasons, and I like them all. Strong equity gains, fading recession fears, rising corporate profits, AI and tech innovation, modest Fed policy, and inflation is kind of quiet, and income opportunities.
You summarized it well.
How do you feel after that?
Even better.
What
I
was
mean,
your,
I was an 87 on my Aura
you're gonna be
2
like
minutes ago, and now I'm going to
you'd be like a 93.
flying.
You are so sanguine about in the face of all this.
You know,
angst.
Joe, look, I think as we're heading into 2026, the backdrop looks fairly benign. We still think steady 2% type growth next year, economic growth. We think a Fed is moving towards neutral. That tax bill probably starting to kick in. And by the way, the earnings outlook we still see for double digits next year. So not a bad backdrop for equity investors. We know that markets aren't always saying when they don't go in a straight line indefinitely higher. And so will there be volatility along the way? Absolutely. But for now, we see opportunities, by the way, in tech and non-tech parts of the market.
What you're assuming is that like labor doesn't fall off, those numbers don't fall off a cliff. Inflation all of a sudden isn't 4% again. You're assuming that the BBB does, the Big Beautiful Bill does provide some stimulus for maybe individuals and for corporations. So the only thing that you really are, if you had to look for something where you're like, yeah, that's a concern, it's valuation.
Yeah, you know, I think we have identified, we started to think about 2026 outlook, 3 biggest risks. We think 1, AI slows down potentially more than folks expect. So there is a risk there. And we know their business models are shifting a bit.
Ties into valuation too.
And while they're getting more indebted, they're going from asset light to asset heavy. So a little bit of, you know, caution there as well. Second one, you mentioned inflation, and we still think inflation hovers above the 2% target, probably in that 2.5 to 3% range.
It's more than 50% above the 2% target right now, but that might not. You'd like 2.7, 2.6. That would be almost like a soothing.
Yeah, you know, we don't see it re-accelerating. We think the tariff, you know, push higher probably fades by the back half of the year. And we also see, you know, core CPI or CPI is 75% driven by shelter and rent inflation and services. And we think there's a case to be made that that part of the basket starts to moderate as well.
Is it a K-shaped world right now, economy, consumer. But someone pointed out to me yesterday, I guess you can look at it either way, but the value stores, the Dollar General stores, they're doing well. That ETF is doing well. Is that because people need to go there because they're strapped? Or they're not that strapped because they're going there.
Yeah, look, some parts of the consumer are seeking value, and we know, the consumer is pretty bifurcated. There is that lower income that is struggling with years of elevated inflation, but that mid and upper consumer is benefiting from things like stock market gains, like potential gains on home prices. And we do know that the economy in the US is actually 70 to 80% driven by the mid and upper income consumer. And so that part of the market's holding up okay. Even though the headlines may indicate otherwise, the overall economy tends to work smoothly.
And I would say that people are still very wary of a continued bull market at this point.
Look, we're 3 years into this bull market. We'll be heading into year 4. Can the gains slow a bit? Absolutely. We've had 3 back-to-back years of double-digit gains. We think those folks that maybe started out 60-40 investors, if they're looking now at 70-30 or 80-20 because they've seen so many gains, it's a good time to think about rebalancing. So parts of the market like cyclical and value that maybe have some scope for valuation expansion, international emerging markets. And by the way, bonds, even with a 4% 10-year yield, that's close to a 15-year high in yields overall. So some income value there as well.
You don't usually talk about politics and elections, but would a rout in the midterms for Republicans, would it mean anything, or it just means a lame duck?
Yeah, we know markets actually tend to favor the gridlock environment. It means no major disruptions in the policy backdrop. Going forward, we had a lot of big policy moves in year 1 of this presidential cycle. So we think generally, though, in a 4-year presidential cycle, the midterm year tends to actually be the most calm, least gains, and then year 3 and 4 tend to see an acceleration.
A lot of noise. And I don't know what happens in November.
Ride it out, guys. Ride it out. That's what they say. That's what they say. What else do we have here? Otaku, gotta continue to ride the bear. Absolutely, man. Ride it till the wheels fall off, baby. What do we got here? Bull Theory says, breaking U.S. PCE came in at 2.8% and core PCE at 2.8%. Expectation was 2.8% and 2.9%. This is another sign that inflation is cooling faster than the Fed expected. With inflation falling and growth slowing, the Fed has no reason to keep rates high. A rate cut next week is now almost fully locked in. So the question is, do we now start to price in a rate cut next week after this bit of a fallback today? Well, I guess we'll find out, right? I guess we'll find out. Also, this from Scott Besant, my guy, my dude, my brother from another mother, says 2026 will be a great year for the U.S. economy. He says, I am very optimistic on 2026. We have set the table for a very strong, non-inflationary growth economy. He told NBC a strong U.S. economy could drive institutional adoption and restore investor confidence. What I want to see, guys, is I don't want to see any more talking about it. Let's be about it, right? No more talk. I don't want to hear any more from the administration about how great things are going to be. How about pump my bags, right? Show me on the portfolio how great things are going to be, not on the internet, right? That's what I'm saying. That's what I am saying. G Money says, buy more Jasmine, not financial advice, but not a bad idea either. Bitcoin price suddenly drops to 88K as liquidations surge to 500 milli. Bitcoin's apparent calmness and stabilization above $90,000 didn't last long as the asset plunged below that level to a 5-day low of $88,000. Naturally, the altcoins have followed suit, which means that the overall liquidations are on the rise again, hitting 500 million on a daily scale. Recall that the primary cryptocurrency dumped on Monday by over $7,000 in just one day, but quickly rebounded and surged past $90,000. It remained there for a few consecutive days and even challenged $94,000 on a couple of occasions. However, it couldn't penetrate. Ooh, the penetration was too difficult. That level and calmed at around 92K. By Friday, as reported earlier, the bears came back. The very next day, the bears came back and initiated a fresh leg down that drove Bitcoin south to 88K. The altcoins are in the red as well. Ethereum, which exceeded $3,200 yesterday, is close to breaking below $3,000. Did I say 32,000? 3,200. After a 4.6% drop in a day. XRP is also just inches above a crucial support level, having slipped to $2.04 as of press time. Solana, Doge, and Cardano have marked even more substantial declines of up to 7.3%. CC, APT, Hype, Pump, Pepe, and ENA have plunged by double digits, while World WLD and AVAX have plummeted by up to 9%. The total crypto market cap has shed $80 billion in hours to $3.1 trillion as of press time. The liquidations within the past 24 hours have risen to 500 million once again. With 420 million in longs, the total number of wrecked traders has exceeded 140,000, while the single largest liquidated order was on Hyperliquid and was worth 8.5 million, according to CoinGlass. Imagine that. Imagine being liquidated for $8.5 million on a single trade. Oof. Right? It stings, guys. It stings. And then let's get into this piece here as well. Bitcoin price eyes 78K after confirming rejection from key pivot. My target, if we lose 85K, is actually 74K. But Bitcoin's price confirmed a firm rejection from the key level of $94,000, shifting momentum and increasing the probability of a move toward the next support at $78,000. Bitcoin is entering a deeper corrective phase after failing to break above the critical $94,000 resistance level through the week. Several attempts to reclaim this level resulted in immediate sell-offs, confirming another decisive rejection from the region that has repeatedly capped upside expansion. As bullish momentum fades and the market structure weakens, Bitcoin now appears poised to revisit lower support levels. With the 78K region emerging as the next major area of interest, traders are closely monitoring whether this rejection will lead to a full rotation back towards the lower boundary of the broader trading channel. Like I said, for me, it's actually $74,000. Bitcoin spent the majority of the week testing 94K resistance region, an area reinforced by multiple technical confluences. The strongest of these is the channel high resistance, a level that has shown consistent precision in past cycles. Previous touches resulted in clean rejection, and this time was no different. Price repeatedly tapped, just a little tappy tap, little tappy too, the channel ceiling before being pushed sharply lower, marking another failed attempt at breaking structure to the upside. This move unfolded amid a period of quiet deleveraging, with total Bitcoin futures open interest signaling reduced speculative positioning as resistance continued to hold. Cookie Monster, I see you. I see you, my guy. With the rejection now confirmed, Bitcoin has begun rotating toward lower toward the channel midpoint. The midpoint closely aligns with previously established swing lows and typically serves as the next technical checkpoint during the corrective movements. Should the price break below this level, the next major target is the high time frame support near $78,430. This region has significant liquidity and has served as a structural anchor throughout prior market rotations. From a market structure standpoint, the recent rejection can be viewed as another lower high within the broader bearish trend. The rally earlier in the week now appears to have been false recovery. a bull trap, or what is often called a dead cat bounce. Why you always got to be picking on the cats? I don't understand. Volume analysts also support the bearish outlook. Buying activity during the attempted breakout was weak. Y'all, weak. While the selling pressure increased each time Bitcoin tapped the resistance zone, the imbalance of is characteristic of a failing rally. Without strong buyer participation, price is unable to sustain upward moves. Guys, I can't hold the weight of the buying pressure all by myself. Y'all gotta help me, right? Momentum indicators have also begun to shift with the rejection firmly in place and downward pressure accelerating. Bitcoin is now trending back into the heart of its channel. If bearish momentum continues to build, the probability of testing the 78K region increases significantly. Reclaiming 94K zone would be required to negate a bearish bias, but the current structure shows no immediate signs of such strength. So, likely going to continue our way down. Let's just rip the Band-Aid off. Let's get down to the 200-week moving average so that we can curve things out. We can start to aggressively buy and ride things back up. That's all I am saying. I'm putting it out there, guys, into the universe. If you're picking up what I'm putting down, let's go have a look. It would be great. It would be great. Currently 89,675. We need that structural breakdown though. We got to get down below support at 87,257 and another support level at 84,675. Let's get down to 78, 74. Let's continue this journey down to the 200 week so that we can start aggressively buying. Me anyways, not financial advice. You boo boo. Anyway, guys, listen, I got some one-on-one coaching calls I got to get to over on the Patreon. Get over there, book yours today. It is 50% off right now, guys, and it is only once a year that we put this sale into effect. Get over there, lock it in, baby. Book your one-on-one coaching calls or join our group coaching calls. What do we got here? But you do have an ego, that's for sure. And anyone who notices it is toxic. Yeah, nobody cares what your opinion is, though, right? So if you don't like it, go start your own channel and see how many people follow you. Anyway, so yeah, working our way down, guys. Like I said, I will be over on the Patreon. We do have open mic Friday night tonight as well, so check that out. And yeah, all of our training courses are free to our Patreon members. Again, 50% off once a year. Check it out today, guys. Click like if you like this video. Click subscribe if you really liked it. See you guys in the next one. God bless.